On Business Incorporated today. What are the possible impacts of Russian invasion on African continent? Egypt to cater for stranded tourists after flights to Ukraine and Russia are being cancelled. And we'll look at strategies to implement some outcomes of the EU-AU summits. Hello and welcome to the final episode of Business Incorporated on Channels Television for this week. I'm Ini John Mekwa. We'll kick off as usual with market numbers. We see that major equities in Africa, our sentiments were positive at intraday. Nigeria's NGX edged up by 0.2%, reaching an all-time high, while the South Africa's GSE rose 0.42% at intraday. Elsewhere, Egypt's exchange was close, trading on Thursday. It closed in the red yesterday. It was down 3.6%. Similarly, Kenya closed Thursday session negative. Over to the Middle East now, where some major equities were already closed for the week. Abu Dhabi Exchange was trading higher at intraday. Its index was up 0.33%, while Dubai's index jumped more than 1%. Meanwhile, Saudi Arabia and Qatari exchanges closed trading for the week on a negative note. Let's go to Europe now. Russian invasion to Ukraine is still the main, if not the only topic dominating conversations. There we have Rob Watts to give us update. Hello, Rob. So the EU has met to discuss further economic sanctions on Russia. We hear it's mostly economic sanctions. What's the update?
EU leaders holding an emergency summit agreed to the bloc's second draft of sanctions against Russia this week. So fast have things been moving here. The European Commission President, Ursula von der Leyen, says they target 70% of Russia's banking market and key state-owned companies. To be more specific, it's thought the measures include sanctioning more Russian banks. Russians are also set to be banned from making deposits of over 100,000 euros in EU banks. The EU is also set to target Russia's energy sector by banning the export of equipment and technology that Russia really needs to be able to upgrade its oil refineries. There's also set to be a ban on aeroplane parts as well. That's aimed at, as von der Leyen puts it, degrading a key sector of Russia's economy and its connectivity. On top of those sanctions, the EU plans to restrict Russian access to other important technologies such as semiconductor microchips. And just lastly, EU leaders agreed that Russian diplomats and business people will no longer have privileged access to European Union visas, making it harder for them to do business in the EU.
And there have been some criticism in some quarters, though, about the sanctions. Maybe they are not enough. Is everyone in agreement now?
Well, no, there isn't. The European Commission says the sanctions are severe and will have a maximum impact, as they put it, on the Russian economy and its political elite. However, a lot of people might take issue with the word maximum there because these sanctions do not include one measure that some member states are really pushing for, and that's the removal of Russia from the SWIFT banking system. SWIFT is used by banks to send money across borders and would make it very, very difficult for Russia to trade with other countries. The government of Ukraine is pushing for that to happen, and EU countries who consider themselves to be at high risk from Russian aggression, such as Latvia, which borders Russia on the Baltic coast, and Poland, which borders Ukraine, are calling for Russia to be kicked out of SWIFT right now. But the move has not been happening, despite the fact it did have a devastating effect when it was used on Iran. Why is it not happening? Well, there are some big opponents of the deal. Influential member states such as Germany, for example. Chancellor Olaf Scholz says the measure should just be kept for a situation where it might be necessary for other things, as he phrased it. So no ban from SWIFT as yet.
Well, other things. But Europe's energy supply is obviously closely linked. What happens in Russia and Ukraine? Has it been disrupted? What's going on in that area?
Well, there certainly is concern about that. It's precisely that concern that has led to oil prices hitting their highest levels since 2014, even crossing the $105 a barrel mark at one point before settling a bit below 100. But more concerning for Europe is the rising cost of natural gas. It climbed almost 20% following Russia's invasion of Ukraine on fears that supplies could be disrupted. Now, the EU gets 40% of its natural gas from Russia, so a loss of that supply would be a big blow to a continent that is already in the middle of an energy crunch. I've spoken to multiple economists about this issue, and they all seem to be of the view that the EU blocking Russian exports of oil and gas to Europe as some sort of sanction is not really on the cards. The EU has no intention of cutting off its nose to spite its face, but they do say that the more likely scenario is that Russia would or could stop sending natural gas to Europe, perhaps as a retaliatory measure to one of the sanctions. If, for example, the EU were to go through with excluding Russia from the SWIFT banking scheme, that is something that Russia might well do. So severe is that thought of as a sanction in its own right. So were that to happen, it would have massive implications for Europeans. Inflation in the Eurozone is already uncomfortably high at around 5%, but even higher natural gas prices would send that skyrocketing.
All right, Rob, thank you so much for that update. Certainly a story the world is watching closely. Let's move to the U.S. now. Stock futures fell early Friday following a sharp reversal on Wall Street as investors continue to assess the risks stemming from Russia's invasion of Ukraine. Futures on the Dow Jones Industrial Average dipped 0.76%, while S&P 500 futures fell 0.78%, and Nasdaq 100 futures recovered, but still in the negative at 0.65%. The market was initially spooked by Moscow's invasion against neighboring Ukraine early Thursday. We have Maria Bed now with details of how Thursday's trading ended.
The U.S. stock market was shaky on Thursday as it opened in a downward trend, but ended on an uptick as the S&P 500 closed at 1.5% up. The Dow Jones closed at 0.3% up, and the Nasdaq closed at 3.3% ahead. It is clear that investors are hopeful that the U.S. sanctions against Russia will have a positive impact on the U.S. stock market. Despite the fact that oil prices are increasing, many investors are still putting their funds and still putting their hope into the U.S. economy.
The markets now in Asia Pacific shares mostly rose on Friday as investors assessed the Russia-Ukraine conflict following a massive comeback on Wall Street overnight. Japan's Nikkei 225 was up 1.95% at 26,476.50 at the close, while the Topix gained 1% to almost 2,000. Elsewhere in South Korea, the Kospi rose 1.06% to 2,676.76, and the Kosdaq added 2.92% to 872.98. The Shanghai Composite in mainland China added 0.63% to close at 3,451.41. Shenzhen Component jumped 1.21%. Hong Kong's Hang Seng Index declined 0.56% in Friday afternoon trade. The S&P 500 200 in Australia was mostly flat. It was up 0.1%. Block shares trading in Australia surged 32.49% after it reported better than expected fourth quarter profit yesterday. The company's main listing on the New York Stock Exchange also saw stock prices jump 18%. MSCI's Broadex Index of Asia Pacific shares outside Japan traded 0.83% higher. In the oil space now, prices pushed higher on concerns that Russia's invasion of Ukraine may impede global energy shipments following a wild session in which prices spiked more than 9% before giving up gains. Brent's crude climbed around 2% after surging above $105 a barrel at one point on Thursday. Buyers are shunning Russia's flagship Urals grade on concern over potential problems when it's due to attack, while China also said it will hold off on new purchases of the variety for the same reason. U.S. imposed its toughest ever sanctions on Russia as it tanks and troops moved closer to the Ukraine capital, but said restrictions on currency clearing would include a carve-out for energy payment, a crucial source of revenue for Moscow. President Joe Biden has said that Russia will not be barred from the SWIFT international banking network because Europe opposed that action. Despite that, some European lenders are scaling back exposure to Ukraine and Russia in a threat to the credit lines essential to trade. And while all of this is going on, questions are, how will this affect the African continent, especially the economy now 2 days into this? We have Mr. Bismarck Ruwani, Chief Executive Officer at Financial Derivatives, now to tell us how this connects to Nigeria and, of course, the African continent. Good afternoon, Mr. Ruwani. Good to have you.
Good afternoon, Ini.
All right. So what should African economies be doing at this time?
Well, the way the Ukraine invasion affects Africa is in 4 dimensions. One is the fact that Africa is a commodity-dependent economy. In other words, it generates most of its revenue from commodity exports. 2 is that Africa relies mainly on China and Russia for financial support. 3 is that Africa also imports a lot of oil. So when the price of oil is increased, inflation in Africa also increases. And finally, Africa is also caught in between this crisis in terms of coming out of a recession. Africa is just coming out of a recession like the rest of the world. Therefore, what does it mean for Africa? It means that, one, that today with the oil prices increasing, the price of petrol and everything across Africa is going to increase. A few oil exporting countries like Nigeria, Angola, and Equatorial Guinea will benefit in the short run, but eventually, when there's a global recession, then it affects everybody, and Africa suffers, like what happened in 1974, what happened in 1981, and what happened in 2009. So the specter of a global inflation, global recession, the specter of increased oil prices, and the specter of global stagflation, not just a recession, stagflation, where the economies actually tank, and high unemployment, having just tried to come out of the COVID problem is a major issue. So this is not a situation that Africa benefits from. A few oil producers will benefit in the short run. Eventually, they suffer. But for a country like Nigeria in particular, it benefits from high oil and gas prices, oil prices, but suffers definitely if there's a global stagflation and a recession at the same time. That's the truth.
All right. So with this movement in oil prices, we see yesterday it went up to 105 and then it's down to 100. What's your outlook for oil prices? And even though you said it's going to be a short-term benefit for countries like Nigeria?
Well, I think that oil prices were already basically short-term. You can see oil hang around 105, maybe 110. But it will come back down to normal, which is around 85, 80. Even at that level, it's going to be a problem. But you cannot take away the view that the Iran nuclear deal is going to be signed. You cannot take away from the view that Russia has a short-term and a long-term goal. So the long-term goal is not to be at war all the time, but the short-term goal is to ask for a regime change in Ukraine and also come back to normal, because Russia is a major oil exporter. Right now, even the Chinese have said they're not going to buy Russian oil anymore. So Russia begins to suffer at this point in time. So the whole idea is that, is this a short-term crisis or a long-term crisis? Remember, this is the longest period in the history of the world when there was peace, between 1947 and today, which is 72 years. All of that, between the First World War and the Second World War, between the Franco-Prussian War and the First World War, there were shorter periods. So are we in for a long-term war, or are we in for just a short crisis? This is the big issue right now.
Yeah, big issue that we'll certainly be looking at that space for. Thank you so much, Mr. Bismarck Ruwani, Chief Executive Officer of Financial Derivatives Company. Thank you so much for sharing your thoughts with us.
Thank you for having me.
We'll take a break now. When we come back, we'll see more efforts towards the Russian invasion And of course, there are other stories on the African continent. To stay with us is Business Incorporated on Channels Television. You're welcome back. You're still watching Business Incorporated on Channels Television. Well, Egypt has promised to look after any Russian and Ukrainian tourists stranded in the country because of flight cancellations stemming from the invasion. Tourists from countries where air travel has been disrupted will be able to stay in the hotels where they are Egypt until they are safe to return home. The decision followed a flurry of flight cancellations after Russia sent troops across the border into Ukraine. Flights from 11 airports in southern Russia and 1 airport in Moscow and ex-Crimea have been cancelled. French carrier Air France and German airline Lufthansa have also suspended flights to Ukraine. Well, let's see what else is happening in the world. The heads of government of the member states of the African Union and European Union met for the 6th European Union-African Union Summit in Brussels recently, and many issues were discussed, ranging from security, partnership, and more. Well, we have joining us now from New York City is Priscilla Bunzu, a Wall Street attorney, now to tell us some of the outcome and how it should be implemented. Hello, Priscilla. Good to speak with you. Good afternoon from Nigeria.
Thank you so much for having me. It's a pleasure to be back. Thank you.
Great. Yeah. So what's the general sentiment regarding the outcome and some of the agreements, from the EU-AU summit?
Well, critics have been rather disappointed with the final outcome of the 2-day summit between leaders of the European Union and the African Union. The meeting itself was seen as some sort of opportunity to open a new chapter between the continents and to address common challenges such as the climate change, the energy transition, sustainable development, and economic recovery. The goal here was to achieve a renewed and modernized and more action-oriented partnership. However, it seems that the European Union has failed to entirely convince the majority of the represented African nations in Brussels that Europe seeks to be the continent's most reliable partner, despite the fact that Europe presented plans for projects to bolster internet access, transport links, renewable energy as an alternative to cheaper loans that were coming in from China. However, the details on such very ambitious plans and projects remain rather vague and have still not been entirely agreed upon on the African side. On the other side, we see African leaders who are pushing for more aid by the European Union through the channels of the International Monetary Fund. So while the 2 days of intense discussions likely strengthened the relationship between the African Union and the European Union in several areas, major differences unfortunately remain when it comes to tackling some of the world's currently most pressing issues.
So from what you're hearing, do you see any conversation going forward in some of these areas that you've described as disappointing, the disappointing sentiment? Are there any plans, maybe to further the conversation or implementation like you mentioned?
Yes, there has been, the issue here is that, first of all, there were way too many topics to be discussed. And then there haven't been a lot of agreements made in terms of the discussions or the topics that have been discussed. So this disappointment, I would call it bifurcated. On one part, we do have some discussion about very currently pressing issues. And then on the other hand, or on the other side, we do have topics that have not been agreed upon at all, that haven't been discussed in detail at all, which are also very pressing issues right now. And so it's a bifurcated issue, I would call it. And so that is what most critics who are saying that it was a disappointing summit, that's what they are referring to. It's just, we haven't spoken about everything that's on the table. And then the things that we have spoken about, we have not really concluded or found a good resolution or result for both of us.
Yeah, but partnerships were formed. Don't you think with these partnerships that we don't have to wait for another general meeting, EU-AU meeting? I mean, with these partnerships, perhaps that's one way to go.
Well, I mean, there are a few topics that can be discussed at the next meeting, but some of them will probably have to be discussed right now. I mean, everything that relates to COVID-19, everything that relates to the pandemic, everything that even relates to what's going on in Russia and the tensions that have been going on between certain countries or uprisings or any political issues that seem to be rather current than anything that could be pushed back into the future. And so they will probably have to distinguish between those topics that can be pushed back to the near future, maybe to the next summit. And then we have the topics that are pressing right now, but we haven't really found a way to deal with those topics right now.
Well, it seems when we are talking about topics right now, the Russian invasion is one that seems to be overshadowing and might even take attention from some of the agreements from that summit.
That is correct, because it does affect the African continent as well. It also affects Europe. It affects the whole world. And so that is one of those pressing topics, for example, that would not be able to be pushed back into the near future. This is something that affects everyone right now. It affects earth oil, gas prices. It affects economies. It affects transport at different industries. It is something that definitely needs to be handled at this point and would be considered as, I guess, a more pressing topic compared to some of the others that we would be able to talk about at the next summit.
Yeah, well, you can say that again, Priscilla, because, I mean, I think this is what the world is talking about, and this is where the world is looking at now, the invasion and how to calm nerves, get peace back on track in Ukraine, and then we can look at other. Well, thank you so much, Priscilla Bonsu, for joining us for this conversation, and do take care of you.
Thank you. Same to you.
And just before we go, in Zimbabwe, raw milk production is up 14% to 7.38 million liters in January this year, and that's compared to the same period last year. Zimbabwe's milk production is improving steadily after the government, in partnership with We Effect Zimbabwe and stakeholders, launched a 4-year dairy project to the tune of $8 million last year. The project is expected to increase the country's annual raw milk output to meet the national monthly domestic demand of 10 million liters. The scheme will benefit 4,000 small-scale farmers and is part of a $45 million European Union-funded Zimbabwe agricultural growth program. The project includes a national milk mapping exercise to guide the implementation. The ZAGP mapped traditional milk-producing areas and identified at least 33 districts where the initiative can be rolled out. That's it for this week for Business Incorporated. Thank you so much for being a part of it. Let's do it again next week. I'm Ini John Mekwa. Enjoy your weekend.